Hey guys, this is Claudia here from the Bookkeeping Experts. I'm back for one more week of education and getting ready for tax season. For those of you who are still getting things ready for tax season, today we're going to talk about how do I know that my books are ready for my CPA. All right, so here we go. We're going to go straight into QuickBooks Online. There it is. Okay. All right. So here's my QuickBooks Online, and this is the main dashboard. Okay, so the first thing that I want to see is to make sure that all transactions in banking are categorized. So I would go as far as, the year that I'm looking for. So it's last year. So what I can do is just on all dates for review, I'm going to put it last year. I'm going to see if there is anything here. Yes, there is a few things here. Okay, so I can actually update here and just finish matching. This one is supplies. And matching to an expense. Matching to an expense. Everything is done on this account. Keep in mind, this is just a sample account. Okay, so nothing else for last year. Now, the next thing I'm going to do is to verify if my account is reconciled. Okay, so that's an important part. And I know that a lot of you may not reconcile accounts, but I highly suggest to reconcile because that's how you know if your account is accurate and there is no duplication. So I've seen clients, especially if you have integration with apps, which I highly recommend. But at the same time, if you don't know exactly the workflow of the app, you can be duplicating all your income or all your expenses or both. So remember that if you have an app integrated with QuickBooks that will generate a sales receipt or a bill payment, you want to make sure that in banking, you will be matching to that transaction that is coming from the app. If not, you're duplicating everything. There is a workflow for each app. And many of you have seen many of my videos on Square. I have lots of video on Square. And also Honeybook. I have video on Honeybook and a lot of the other apps, right? So you want to PayPal is one that duplicates quite often. So you got to be very careful with that one because it works like a bank. And anyhow, you want to make sure you don't duplicate your expenses. That's the point. All right, and you do that by reconciling the account. Okay, to reconcile the account, and I do have a video on how to reconcile. I'll put the link down below. So if you want to see that, go ahead and do that. But to get to the bank register, I want to take a look at the bank register right now. So there's several ways for us to do it. You can go into accounting and then go to the chart of accounts, or right from the bank account. See, I'm on the checking account here, selected as checking. I can click to go to bank register, and it goes straight to the bank register, where the bank register is where it shows all transactions in that bank account, right? Usually, if the account has been reconciled, it's going to show here on the top left-hand side. Okay, and if the account is reconciled, what you're going to do is the following. You want to make sure that all transactions for that period is reconciled. So let's suppose that this is reconciled up to December 2022. So what I'm going to do is the following. See the little funnel over here? I'm going to click on the arrow right next to it. And where it says reconciliation status, I'm going to drop down and I'm going to click on not reconciled. And if this was reconciled to December 31st, 2022, I'm not going to put any date on the from, but I will put a date on the to as of December 31st, 2022, and then apply. So all transactions that have not been reconciled is going to show up. And what I need to do is to fix those discrepancies. You need to find out with your if those bills were actually cleared on this account. For the majority of my clients that have problems with unreconciled transactions, because they recorded maybe a personal expense, or I'm sorry, a business expense that was charged with a personal card in the checking account, and it didn't happen on the checking account. So what I do to fix that, I create like a clearance account, bank account, and I transfer those transactions to the clearance account. Okay, now a lot of times what you see is a duplication though, and for those duplication you want to make sure that you delete any kind of duplication or you match it in banking. I have another video on duplication. If you want to watch it to see how you fix it, once again, reconciliation and duplication, you want to make sure that you clear all those transactions, right? You don't want any, if you have reconciled to December 31st, 2022, and you selected here that you want to see transactions that have not been reconciled, it means that this was not reconciled properly and you need to fix all those transactions. That's the bottom line. They are duplicating in your bank account. So let me show you how. I don't want to lose my train of thought. Let me show you how to create a clearance account. Now, want to let you know that when you create a clearance account, you will need to do a journal entry to remove the balance from the clearance account into an owner's equity account, such as owner's investment. Okay, so we're gonna go on the left hand side, click on accounting. We don't have any clearance account. Now, the clearance account it's a bank account that is not linked to any bank. Business transaction recorded with personal credit card. If you want to take a look at that, that is also very helpful to understand. So we're going to create a new here, and it's going to be a bank. Okay, so very important for you when you're creating an account in the chart of accounts. Very, very, very important for you to choose the right kind of account. What I'm creating is a bank account, like I said, but it's not a bank account that is connected to a bank. So where it says save the account under, it's going to be under the bank, general bank account. Okay, tax, we can call it cash on hand or we can call it checking. I'll call it cash on hand. I'm going to name it, let's see, business expense paid with personal bank or funds, whatever, personal funds. Okay. All right, so we created the bank account here, and we're going to go back to that register. If there are some transactions that doesn't belong, you know for sure that does not belong into this account. So you want to create, you want to click on the transaction. We're going to add it. And see where it says checking account on the payment account. We're going to change that into the business expense paid with personal funds. Save and close. And that is gone. Okay, it went to that account that we just created. So that's how you are going to clean it up. You want to make sure that this is all cleaned up. So this is the first thing. So first you check if there's any transactions to be categorized in the banking. Second, you verify if there's any transaction, or second, you got to make sure you reconcile the accounts. Third, you want to make sure that if the account is reconciled, that there is no unreconciled transaction for the period that the account is reconciled. Okay, so second, we're going to take a look at the profit and loss. the report. You're going to click on reports on the left hand side. We're going to click on the profit and loss, and we're going to do it last year. And you want to make sure that there is no negative account in the income account or no negative account on the expense account, except for discount given, because discount given is actually a negative amount taking out of your sales, right? Or refund. So discount giving and refund should be negative. Everything else should be positive on the income account. On the expense account, everything should be positive. If there's anything negative, you just need to take a look at it. Maybe it's just miscategorized. Keep in mind that if you have a refund on office expense, you want to categorize that refund as an office expense. If you have a refund that was given for Home Depot, you want to as supplies, you want to record or categorize that transaction as supplies as well. So you want to be consistent in categorizing the refund to an expense the same way that you categorize your expense. This way is going to offset that expense. There are occasions where there could be a real negative amount on the profit and loss. There's usually very few exceptions. One of my clients, for instance, had some travel expense refund in 2022 for a trip that he booked in 2021. So in 2022, his cash basis is going to show as a negative travel expense. But that is right, because that expense was recorded as a travel expense, but the year before. So it happens. Other than that, it should be completely clear of negative or positive. The next thing you want to take a look is if there is any uncategorized income or unapplied cash payment. You don't want to have any uncategorized income. You want to make sure you dig into that income and verify what that income is for and categorize it accordingly, or create a sales receipt and match it in banking, but it needs to be categorized to what it is. Unapplied cash payment, I have a video on how to fix that. You want to take a look at that. It's very simple, and usually it's just the date of the invoice that is after the date of the payment, or sometimes it's just the amount that was paid is for more than what the invoice was written for. So the way you fix it is just, if it is the date, you just go in the invoice and fix the date of the invoice to a date prior to or the same as the payment date. If it is a difference in payment, you want to go ahead and go and fix the invoice and add any extra service or tip, whatever happened that you receive more money than what it was due. So you want to adjust the invoice to reflect that additional amount. Something else to be aware of is, ask my accountant. Those are transactions that need to be categorized and has been sitting in there so that, maybe needs more information. Maybe is the bookkeeper asking for more information, or maybe it's the business owner leaving in there because he or she is not sure what's going on. You want to be able to resolve those transactions. Same thing as uncategorized expense. All uncategorized expense should be cleared. So if it is sitting in there, you need to go through them and make sure that is all clear. All right. Those are the main things that you want to look at in your profit and loss, and make sure that they are all clear. And also miscellaneous transactions. Miscellaneous transaction doesn't really add any information for your CPA. You want to make sure you categorize it to what it is. You know, if it is dues or subscription, it should be in dues and subscription. If it is charitable donation, should be under charitable donation. So you need to make sure you take out of miscellaneous and put it where it belongs. Means that miscellaneous, it's not a house, so it's just sitting. Those transactions are sitting without a house, without a proper categorization. Okay, so those are the main things on the profit and loss. When you look at the balance sheet is actually a very important report, because it's going to show you what happened, what is going on with your company as far as what's all your assets, what's all your liabilities and your equity accounts, and what's your bottom line, what's your firm worth through the years. Okay, a few things to look for is undeposited funds. Oh, yes, that too. Under assets, you should never have a negative asset account unless it's depreciation. So it's a counter account for maybe a vehicle or a building. So depreciation, yes, or amortization, yes, but you should not have a negative asset, because a negative asset means that um, there is some kind of error in there. So maybe depreciation was recorded, but the asset was not recorded. The amount of the asset was not recorded properly in the book. So you want to fix it. Another thing to watch for, so undeposited funds should be zero unless there is a transaction that didn't clear. Oh, by the way, for the new accounts, it's not undeposited funds. It's called payment to deposit, but it's the exact same thing, because undeposited funds or payment to deposit is just a transitory account. Transactions are waiting to be, or income transactions are waiting to be deposited to whatever account needs to be deposited. And if there is an amount there that that is really high, it means that your income transactions probably are not being matched to invoices that have been paid. So you need to make sure you fix that. It means it's not ready. Like I said, we do have a video on undeposited funds, and that is a must for you to clean up. Okay, so keep on going here. In liability, another thing you don't want to see is a negative liability. A negative liability is when you pay more than what is owned on the liability. What usually happens is when the business owner did not record the liability, just recorded the payments to the liability. So you want to make sure you record the liability in the books properly, or maybe you're recording the payment to a car or a loan and you did not divide like what went to interest expense and what went to principal. So those are all things that can impact a negative liability. Okay. All right, same thing. Yeah, so credit card, all those liability accounts should be positive, means that there is a liability waiting to be paid, unless it's completely paid off, right? And then finally, you have your equity accounts. Your equity accounts should be clear, like your owner's distribution and your owner's contribution should be removed. You should, at the end of the year, from those transactions into retained earnings. That's how you clear it, with a journal entry, so you can make sure that the next year you're zero out on that account, and it's going to start tracking all over again for all owners' investments and owners' distribution. All right, so those are the main things. There's so much more, but that I would like to talk to you about, but I could spend days and days and I would not cover everything. So this is just kind of like a very brief overview of things that you need to watch for when you're looking at your books to evaluate if they are ready for your CPA or to file taxes. Okay, one thing you should be doing if you have the liability accounts in the balance sheet, you should be reconciling all the liability accounts, like your sales tax, payables, your payroll liabilities. You will need to reconcile all these accounts to make sure that everything is accurate, right? There's definitely a lot of space for errors in that area. So your tips, if your tips account is zero out, or your gift card balance, if it represents what you have outstanding out there, you want to make sure you reconcile all those accounts, especially the liability, the bank accounts, the credit cards, and any kind of liability account and owner's equity. So take a look also on your owner's equity, or your owner's distribution, or your owner's contribution, to make sure that those transactions does belong in there. Okay, so very important for you to take a look at that. So those are the main thing. Those are the two main reports for your CPA. Of course, we have your CPA may ask you for general ledger. It means that it's a record of all transactions that were entered in QuickBooks for the year. But basically, it's just a detail information of all your transactions. In the cash flow, yes, the cash flow is mostly important for your own information. But for your accountant, the most important thing is your balance sheet and profit and loss. Like I said, the most important reason, and we're done here. So this is it. Those are the two reports that you want to send to your CPA. And okay, so the most important reason why you want an accurate books is for your own information. Of course, the IRS will need that, but it's for your own information. Knowing where you are, and I can't emphasize that enough, knowing where you are in your business financially, it's the key for you to succeed. It's your point of reference. If you don't know your point of reference, how do you know which direction you should go, right? So it's very important for you to know exactly where you are financially. There's several tools in QuickBooks Online to not only keep all your expenses and your income, but also budgeting. Take a look at the growth through the years, comparative profit and loss, and things like that. So those are all very important tools that will help you know what's your point of reference, where you are located right now in the map, and where do you want to go. All right, so hope you like this video. Hey, if you like it, just give us a thumbs up, give us some love, and subscribe to our channel. We love to help you. As a matter of fact, that's one of the biggest joy of my life, is to be able to hear from you that, what I've been putting together and spending my time and studying and improving to be able to share with you, is helping you become a better bookkeeper, a better accountant, a better business owner, that I helped you somehow. So that's my most important thing. So if you like this video, subscribe to our channel so that we can keep you up to date with what's going on with QuickBooks Online and what is there to know, so you can stay ahead of the game and stay in control of your finances, of your business, and know exactly where you want to go. All right, thanks for watching it. And until next time, keep on smiling.